The Green Sheet is a financial publication of the MWRA Advisory Board. This installment is a snapshot look at fiscal year 15's financials through Q1, the first quarter of the fiscal year. The Green Sheet's goal is to be an educational resource for all MWRA stakeholders, and we're happy to announce that it has a new home on our website. Let's take a look with a couple screenshots. On the drop-down menu at the top of our site, you'll see a Resources tab. Click on the Green Sheet option and you'll come to the Green Sheet's archival page. It's broken into two sections. First is the educational section with videos explaining the methodologies behind much of what the authority does, such as how the wholesale rate is set and why entrance fees exist. The second section is for important financial information that has a long shelf life, like year-end reviews or previews of the coming year's budget. And now that we've covered the logistics, let's get back to the regularly scheduled programming. This installment will cover fiscal year 15 expenditures through Q1 in comparison with the budget, but keep in mind that the authority's spending is very reliant on external conditions such as the weather, which can impact both the budget and the progress of capital projects. In this context, the Q1 summary will address what to watch for in the coming months. The Q1 capital spending by major categories compared here with budgeted Q1 spending alone. Wastewater spending was very close to projected, meaning that scheduled projects are on track. Waterworks, on the other hand, fell considerably short. This can easily be made up for in the remainder of the fiscal year, but we'll be keeping an eye on this category because planned projects, especially in the northern intermediate high area, are all of critical importance. Business and ops support is less contingent on external factors and more based on timing, so this category is of little concern at this time. It's important to note that capital spending is planned in 5-year periods, which makes underspending in one quarter of one fiscal year less drastic, but not unimportant in light of larger trends. Moving on to the budget through Q1, we'll look at this in comparison to the total year's budget. Direct costs fall comfortably under 25% expended, while indirect costs require a deeper look. Capital financing looks good at a glance, but also has some interesting issues discussed shortly. Overall, the year-to-date expenditures look good in comparison to the total budget. Focusing on direct costs, the total FY15 budget is just over $217 million, of which $50.6 million has been expended, or about 23.3%. Personnel is the most interesting category, as the wages and salaries portion of this line item have been underspent due to a rash of retirements and the tedious process of replacing retirees. When these positions are replaced, it's generally at lower salary than the retiree, which has also driven down expenditures so far in fiscal year 15. The other highlight is utilities, with electricity and diesel fuel expenditures coming in well below budget due to market conditions and increased efficiencies. The indirect costs are tracking higher than the budget of $47.5 million at $16.3 million expended through Q1, or 34.4%. But this is due entirely to the pension contribution, 62% of which has already been transferred into the pension fund. One thing to mention is that the watershed reimbursements to DCR are lower than budgeted because an over-accrual in fiscal year 14 will drop fiscal year 15 expenditures by over $100,000. Finally, we move to a Q1 capital financing update. All of these categories look good through the first quarter as they are the most straightforward to budget, but there are a couple offsets to discuss. The debt service assistance reflected here was received at the end of fiscal year 14 and was paid forward in fiscal year 15 to lower the needed rate increase. Also relieving the fiscal year 15 rate increase is the bond redemption savings, which will total $6.7 million in fiscal year 15. This is a form of rate stabilization that acts as an offset to expenditures instead of an additional revenue source. Lastly, the authorities continue to see savings in the variable debt category as they have budgeted short-term interest rates at historical levels, whereas the market has remained incredibly low. It's always important to keep an eye on this line item, as savings here can lead to future rate relief through the defeasance account strategy. To summarize, here's what we're watching for after Q1. While wastewater capital spending has been on target, waterworks capital projects continue to backslide. These are important projects, and it's important that they don't get too far behind schedule. On the budget side, a repeat of fiscal year 14's favorable short-term interest rates would be welcome in fiscal year 15 and help make another positive step with the defeasance account strategy, which redirects debt service savings towards the prepayment of future debt. Finally, the authority continues to work their way through succession planning. The process may take a few years to fully shake out, but it's important that it be monitored closely. If you have any questions or feedback, please feel free to contact us directly. Also, please visit our website at www.mwraadvisoryboard.com to see the new archive page of the Green Sheet, and feel free to send us any suggestions for future topics.